Brad, okay. Kindly tell us more about yourself and what you do at Adyen and what is Adyen all about?
Sure. So you stole my thunder a bit. When my friends and family ask me what I do, I say I work in online payments, and the typical response is, "Oh, like PayPal." In truth, it's really nothing like PayPal. But my guess is that probably everyone in this room has actually passed through our system in some way, shape, or form. If you've ever used Grab in Indonesia, if you've ever taken an Uber, if you booked a hotel through Agoda or Expedia or Booking.com, if you booked flights with Cathay, if you've ordered off Zalora, then you've probably seen Adyen, or as the point is, not seen us. So we are the invisible network that exists behind a company's payments page and everything that happens thereafter to make sure that your transaction is complete. So I started with the company 3.5 years ago, opening up the Asia Pacific operations. So at the time I had the dubious honor of being person number one. Every meeting I went to at that stage was trying to help people understand how to pronounce Adyen. It's Adyen. Now it's quite nice.
I asked him that a while ago.
Twice just before we came on. So now it's nice that often we go to big meetings and people are like, "Wow, it's great to see you." But it's been a real transition. So from one person in Singapore, we now have 30 people based at our regional headquarters there. We have a Sydney office which is open and 7 people and growing, a Shanghai office with 3 people. And since I started with the company, we've gone from 100 people to 400, spread across about 15 offices worldwide. Headquarters is in Amsterdam, with a second headquarters in San Francisco. If there's anyone here involved in startups, which I'm sure there are, you know the investor appeal of having an office based somewhere down Silicon Valley. Our last valuation put us at 2.3 billion, which for a company of 400 people is not so bad. But fundamentally, our focus has never shifted. We're still owned by the founders, over 70%. And the idea is to keep on growing with only the largest customers in the world. So anyone who's multi-market, many transactions, both online, point of sale, then they're the kind of people we want to work with.
Okay, so in emerging markets, for my first question, okay. In emerging markets, we know that, well, cash is still king. So how do you see the nature of transactions changing in this region? And then can you give us an overview of the online payments market? How big it is? If you have some data and stats with you.
It's big, it's growing. I mean, it's very hard to quantify. As, again, people will know here that if you're ordering online in Indonesia, but also in Philippines, in many other countries, then cash is still king. So you're normally going to be used to cash on delivery.
Yeah.
We do see that shift changing. The unbanked population is decreasing. People are becoming more confident with actually transacting online. But fundamentally, it's about cultures and preferences too. So these transitions happen slowly over time. With most of the merchants we work with in Indonesia today, you see them offer a hybrid of solutions for their customers. The most important thing is to make sure you have the payment methods available for what people want to pay.
Yeah.
You'll see with Gojek, with GoPay, obviously they're trying to introduce a frictionless element, which is fantastic. That's better for everyone in the long term, but you still have those people who won't trust it, won't be accustomed to it. So depending on what goods you're selling, of course, airline is very different from a retailer, is very different from a gaming company. You need to make sure you're offering the relevant payment methods for those customers. I'm not going to lecture people in this room about what people pay with in Indonesia. You probably know better than I do. But it's normally a mix across Southeast Asia of online banking, of cash payments, be they at ATMs, convenience store, or cash on delivery. And we do see a growing trend, of course, towards credit cards, which a market like the US is 99.9%. Somewhere like Indonesia, we see it as about 25%. So a lot of room to still grow, I think, in that direction.
Okay, so yeah. Next, which brings me to my next question. Credit card penetration is really still so low in most markets, right? So for small merchants, what are the options or alternatives for them? Like other payment methods that they can consider?
Yeah, I mean, again, credit cards are probably your preference. The logic behind that is you get instant authorization. If you want to offer your customers the ability to refund a transaction, you can do it through an API. You also get settled the funds within 2 days, so it's great. But it's about understanding who your customers are. If I was starting up a gaming company in Japan, I probably wouldn't care about credit cards that much. I'd be going for prepaid cards because most of my demographic are 15 years old, and don't have the ability to open a bank account yet.
Okay.
If I'm an airline, it's a bit different. You know your customers are traveling frequently. They probably have a lot of spending power. So for someone like Cathay Pacific, we'll see a much higher volume of credit cards than for Blizzard, who, World of Warcraft, I'm sure some people have played that before. You know, and people don't use credit cards when they're playing that game. So it's really about understanding who your customer demographic is and trying to make sure that when they want to buy, when that purchasing opportunity is there, you have the mechanisms in place that make it easy for them to do so.
So in Indonesia, what's like, if you have like any idea, I'm sure you have some info to share with us. What are the most commonly used payment methods in Indonesia? And how, I mean, in terms of consumer behavior.
I was going to say, you're really pushing me to pick one, aren't you?
And how does that compare with the rest of Southeast Asia? Because we know that,
Sure.
you know, the markets in the region are very fragmented, and each country has its own nuances. So what's the consumer behavior?
Again, it's influenced by so many things. I mean, Indonesia is very fragmented, and you see a lot of the payment behaviors are actually driven by the 3PL requirements, so logistics. The same is true in the Philippines too. I mean, again, there's a lot of different islands that you need to deliver to. Often because of those logistic complications, you actually have more of a developed transportation network than you actually would in some other more developed countries. So then the idea of collecting cash and having local companies who can facilitate the entire transaction for a merchant is very common. But I would still say it's not ideal. If you're talking about someone like Zalora, I don't think they mind me sharing this, but in Indonesia they see about 60% of their transactions happen through what we call ATM bank transfers. So go down, put cash in. So it's very, very cash dominated. If you're talking about someone like Agoda, they don't even offer that. Because in their model, they have to guarantee a hotel booking within 24 hours. There's no guarantee they get the funds for even 2 weeks. So it really, again, does depend on what business avenue you're in. But in a nutshell, travel, it is credit card dominated, even in Indonesia. Visa tell me that there's only 4% Visa penetration in Indonesia. That may be the case, but those 4% are definitely doing the majority of the spending. When it comes to retail, cash, whatever form that may take. When it comes to gaming, again, it could be anything. Gaming companies don't really care. Carrier billing is fine. There's no real cost component. It's a digital product. So not really dodging your question, but I can't give you a defined answer.
Okay, so Adyen is catering to a lot of big tech companies, Uber and Grab and Spotify, right? Booking.com, so to name a few. Why do they choose Adyen over other payments?
Yeah, I mean,
Solutions
when
there.
you're looking for a payments company, the guys we work with aren't normally startups. We have made some exceptions. We work very closely with the Rocket Internet Group. So if they're opening a new business, we know it's going to be very well funded, very aggressively managed. And yeah, I mean, the relationship means we'll, of course, help them out from the beginning. But invariably, I think companies look for reliability first and foremost. But in more mature markets, it's not just about viewing payments as a commodity. The questions our merchants ask is not, do you support Alipay or WeChat? Do you have Alphamart convenience store payments? They're asking about the level beneath that. They're saying, okay, so when you take our payment, what are you doing to help guarantee that we're trying to get a successful transaction? As in, we don't want any errors to occur. We want to understand everything that's happening between our website and when you give us back a response, be it an authorization, a decline. And that's the secret, I think, around payments, is that there is a plethora of data. I think people throw around the word big data a lot without really knowing what it means, but we truly leverage it. So, again, what happens in the payments world is when say you're playing with a credit card, and after that point, barely anyone actually knows what happens, but your transaction will go through a technical interface of a gateway. It will be bounced around through a fraud management system. It will then go to an acquiring bank who have to operate in between the merchant and the card schemes, Visa, MasterCard. They have their own risk settings and bounce another API call. They then send it through to the schemes. The issuing bank has their own risk settings, and they send hundreds of reason codes back all the way through this layer. So if you think about the amount of data that's passed there, there's a lot of room for error. There's a lot of technical fail points. So really what we try and do is help merchants minimize those as much as possible. And not to get into the depths of payments, because it puts everyone to sleep, but I think our biggest value proposition was we were taking what is a legacy model banks who are running technology built in the 1990s and essentially inserting our technology in replace of it. So reducing a gateway, fraud management, acquiring bank, processing platform, a totally unnecessary four-party model into a single unified platform that harvests all the data, and therefore with that we're able to guarantee reliability.
Okay, since you mentioned data, can you give us an example of insights that you've derived from the data that you get from the transactions you handle every day, and how you apply those insights in, for example, in the case of Grab or Uber, how did those insights help them drive their revenues? So.
Yeah, Grab and Uber are really good examples. Again, there's no silver bullet in payments. You don't make one change and suddenly get 20% higher conversion. You do hundreds and hundreds of minor changes that maybe, if you're lucky, add up to 2 or 3%. Again, if you're a merchant who's selling $1 billion online, 3% is $30 million. That makes a big, big difference. But I'll give you one use case, and again, try not to get too much into the details. But so when you take an Uber or a Grab and you're using a credit card, they do what's called an authorization when you get in. So when you press book, they need to check that that card's still valid, that it still has money on it, that it's not been reported stolen. So they'll actually do what's called a $0 authorization. So they charge your card $0. You never see it, you never know this is happening, but it happens. Now, one of the things that the issuing banks, the people who give you your credit card, they'll have conformed to different guidelines around how they're integrating Visa and MasterCard specifications. So some of them will expect to see $0, some of them will expect to see $1, some of them will expect to see $3. It really depends on what the bank is and how they've uniquely configured what they think Visa and MasterCard's requirements are. Now, what we're doing is doing A, B, C, D, E, F, G testing on all of these banks on a regular basis to make sure we understand that this debit card issued by BCA needs to be sent this way. So all that Grab and Uber have to do to us is say, auth the card. And then dynamically on the back end, because of the data we have and the transactions we run, we'll add a 0, a 1, a flag here, we'll take a field away there, and ultimately then it makes a big difference to authorization rates. Spotify do the same thing when you sign up. You put your credit card in, they don't charge you for the first month. Anecdotally, they say that we help them increase their authorization rates 14%, which if you think for them, that's an incredible, incredible driver of revenue. So, I mean, that's one example for a recurring business model that we do. So anyone who's got a ride-sharing app or subscription base, but I could probably sit here for the next 12 hours and go through what we do for airlines or retailers, and it's always different.
Okay, so let's talk about fraud and security concerns. I mean, that must still be the biggest hurdle for people to transact online and pay online. So, how do you manage? How should merchants handle fraud and these other concerns in a way that you don't discourage or you don't hinder yourself from acquiring new customers?
Yeah, I mean, fraud, it comes under the bigger topic of risk. Risk for merchants, everyone's heard about the big high-profile cases of Target, the very big supermarket in the US. There was basically malware installed on the point-of-sale terminals in store. What that meant was that millions and millions of credit cards were stolen. Sony PlayStation had this a few years back. It happens to every merchant. It happens online. It happens point-of-sale. So you have that first part of risk from a merchant perspective and how you choose to manage it. This comes under a very, very boring acronym, PCI DSS, Payment Card Industry Data Security Standards. You don't need to understand exactly what it is, but these days it's commonplace for merchants to outsource that responsibility. So with someone like Adyen, but like lots of other payment companies too, we'll be tokenizing the card data. So if you look at the instance of Grab, they don't store that card data on their systems. They don't have that liability. They don't have that risk of being hacked. We tokenize it for them. So they never store the card details. They store a token which is relevant to each card. So boring part one. Boring part two is how you actually manage the fraud coming in. Fraud used to be all about rules. So you see, this card has been used 5 times in the last hour. Okay, maybe it's risky. You do it based on the transaction type. They're buying 5 TVs for a total value of 5 million rupiah. Okay, that's potentially a risky transaction too. But writing rules has a negative effect. The rules that you wrote for your system 2 years ago may nowadays actually be stopping good customers who legitimately want to buy. Maybe people spending 5 million rupiah online today is risky. Maybe in 10 years' time, when Indonesia's economy has flown up, it's not. So you normally combine a machine learning approach with a rule set to try and basically have a very intelligent, again, data-based way of understanding the real risk of a transaction. And it's always about that sweet spot. The gaming companies, EA, Blizzard, Jagex, they don't care. If you told them, we'll let every transaction through, they're like, fine. If it's fraud, so be it. You know, we'll just cancel the account when we find out we haven't lost anything. If you're an airline and someone's just bought a business class ticket and flown one way to New York for 15,000 US dollars, and then they get off the plane, you never see them again, that's obviously a big, big risk. So again, fraud needs to be managed based on what your business type is, what your exposure to risk is, what your tolerance is. But fundamentally, it should be a data-based approach today versus what the historical way was of rule-based. It's pertinent for the Indonesian market in particular, because I think today there's still a lot of legacy approaches to payments in general, but a lot of that relates to fraud too. So this market is huge. It will be massive, massive soon. And you can't deal with scale with rules. You need to have machine learning and base it on data.
Okay, so now I want to open the floor for questions. If you guys have any questions for Brad, later. We want to make it more interactive, so yes.
Thank you. Great talk, by the way. I want to ask about, so you pretty much have a regional
Can you
reach.
stand up so we
sure.
can see
Yeah.
you?
So you pretty much have a regional reach in Southeast Asia or APAC. How do you navigate to the legal license of each and every single one of these countries, or like regional combined? Do you work with Visa? Do you work with the local banks, or how? That's first. Second, in Indonesia, we have a very special rule regarding credit card using 3DS. So how do you also navigate through that system? Obviously, you work with Uber and Grab to bypass that system, and several other big merchants actually cannot bypass that 3DS system. So how do you navigate that? And then third, and how do you see yourself? I think Spotify also working in Indonesia is through phone billing. Do you also do that, and how do you navigate through that as well? Thank you.
Thanks. I think you used up all the Q&A, but so where did we start off there? It was legal licenses. So Adyen, we actually just got our banking license in Europe, which is a really big step forward for us, but not so much to do with payments. In somewhere like Indonesia, we act as a technical gateway. So we work with BCA, BNI, I mean all the big banks, and we route transactions to them, but only as a technical capacity. So the licenses for actually processing those transactions reside with the acquiring banks. So in many markets, that's how we operate. We'll connect into the biggest local banks, the ones who we think are the most reliable and provide the best processing quality. And then they're the ones who actually ultimately have to stay compliant with either local regulations or scheme rules. In some markets, Hong Kong, Singapore, Australia, obviously Europe, US, Brazil, we actually are the bank ourselves. So we hold the licenses in-house. That's always our preference, because then we get to use our entire technology stack and we don't have to rely on anyone else. But it's step by step, and to get these licenses takes a lot of work. We've been cash flow positive since 2011. We have a vast amount of money on the bank, but the reason we have $500 million in cash is simply because that's what's required to be able to acquire these licenses in each individual market. Because when you're running people's transactions, you need to make sure that we don't roll over overnight and suddenly everyone's money disappears. 3D Secure, yeah, I mean, depending on the market you're in, it could be mandated. So like in India or Malaysia, you have to run everything through 3D Secure. It's not in Indonesia. It's actually the acquirer who will say whether or not you need to turn it on. So many merchants, the acquirer will say you must use it because they view it as safer. It is. It's much harder to have fraud when you have 3D Secure on. But the big merchants, Food Panda and people like that, they'll never use it because in their sort of business model, it adds friction. And everything about payments is trying to reduce that as much as possible. But we normally say use 3D Secure dynamically. So imagine that we're working with an airline. They've got a low-cost ticket. It's a return. It's leaving in 2 months from a customer they know. That's really low risk. Then they've got a new customer who's flying one way, first class, 2 p.m. today. That's super high risk. So for that latter transaction, they may turn 3D Secure on, but they make the choice. And I think that's the important thing, is that merchants need to understand that 3D Secure can be very useful for you in a way of managing risk, but it's absolutely not mandated in Indonesia. So if anyone here is running an e-commerce site and you've been told you need to turn it on, that's not true. Your bank may still make you, but that's their decision. It's by no means a regulation here. What was the third part?
Phone billing. So you
Phone
charge
billing.
by phone credits.
Okay.
Yeah.
Yeah, so carrier billing is not something most of our merchants want. So it is something we support, but we only see it used really for gaming companies. The logic is that your cost, you will be charged by the telcos about 20 to 30%. No one can afford that unless you're selling a digital product. So yeah, maybe Spotify just, but they have license fees. But really someone who owns the content, so a gaming company is the obvious example. The other downside is that the settlement terms are normally 60 to 90 days. So if you can afford to wait 90 days to be paid, sure, turn it on. But a retailer won't use it, airline couldn't use it. So it's something that we view as probably a dying payment method. It's a nice bridge at the moment for people who obviously have a mobile phone and don't yet have a bank account. But fundamentally, as people become more banked, you're going to see carrier billing just drop off. We saw it in the US, we saw it in Europe. It's happening already in Asia.
Hi, morning. My name is Sia. How would you advise for the high-risk kind of business? For example, I'm involved in money transfer business. I try to be a merchant with lots of gateway. It's rejected, obviously, because we are doing online money transfers. So what is your advice, or what do you think about how a high-risk business can become merchants and comply? I mean, we do have all the compliance, but a lot of the time, acquiring bank don't want to listen because, yeah, it's high risk.
Yeah, fair. I mean, some business models inherently have more risk. We work with TransferWise. Obviously, they're probably one of the largest peer-to-peer money transfer companies in the world. The reason we had confidence to work with them, and believe me, we did a lot of due diligence, was because we understood that their KYC process, know your customer, they really invest time in making sure that they're running a very legitimate business. So if you're talking about money transfer, you have a lot of risk around AML, anti-money laundering. You always need to make sure that you're understanding who the remitter and the receiver are. And as long as you can justify that, look, we're running a legitimate business, we're making sure that these transactions are for these type of services and they're for these reasons between these types of people, then you can definitely find acquirers with the appetite. But I think the rule of thumb, unfortunately, especially in Southeast Asia, is if it's risky, don't try and explore an avenue to support it, just say no. And we see a lot of that where it's much easier just to turn things down and say yes. Europe, we're quite familiar with that model. The US, again, they're not very open to it. There's always different legislations locally which come into play too, but fundamentally what your challenge is you need to justify how you're running your business, and I hate to say this, but ultimately find a sympathetic ear at the right acquiring bank. We can talk after.
Questions? Any more questions? Okay, to close this session, maybe you can give us some advice. If there are small merchants here who want to set up a store online, what's your advice? What are the things that they should consider in terms of payments? And I know that Grab, for example, uses both Adyen and Stripe, your competitors. So would you advise people to use multiple services to maximize revenue? I mean, yeah.
Yeah, I mean, a lot of it's about reliability. If you have faith that the company you're working with will always be there, and especially if you're small, you don't want to go through the hassle of building two separate integrations, signing two different contracts, having two different reporting flows streaming into your CRM system. So I would normally say if you're small, start off simple. It comes back to the point we talked about at the beginning, which is understand what your business is, understand your customers and how they want to pay, and of course try and give them those options. There are some great local payment companies in Indonesia that if you're just focusing on this market, you can go work with them, and when you're getting up and running, they're fine. To address Grab, well, the reason Grab, I think, wanted to work with Adyen, they started off with Stripe. That's fine. Stripe are a cool company. They have a really nice API. They make it really easy to get up and running. But fundamentally, they lack a lot of what we try and solve. So they connect into acquiring banks. And acquiring banks, again, it's not Stripe's fault. They have a really good platform. But those banks are running technology built 20 years ago. So you're only as strong as the weakest link in a chain. That's where we've tried to step in, and not in every market, but we're getting there, is actually take ownership and take the bank out of the equation completely. So we're not relying on someone else's technology stack at all. But we talked about tokenization very briefly as well, that, Grab are sensible. They don't want to have that data on their systems. But if I'm a Grab user and I register my card in Malaysia and I travel to Thailand and then come to Indonesia, because we're the ones who are tokenizing their cards and connecting Grab to local banks in every country, I can just seamlessly use it. Someone like Stripe, again, they don't have the local banking connection, so in theory, you would have to then re-register your card every time you get to a country, which means I can't get to the airport and pull out Grab and just click book. I'd need to pull out my credit card and type in 16 digits and things too. So I think we solve different problems. If you want to offer credit cards and that's it, and you want to do it really quickly, Stripe are a really good choice. It's why we don't really focus on the SME sector that much. Our merchant base, and we only have 4,000 or so worldwide, but it's the who's who. It's Facebook, it's Google, it's Uber, it's Grab, because then we can really dedicate the time to helping them understand their customers' buying habits. And of course, we need to see an ROI. So much as I'd love to, I can't sit down with every SME who does 5,000 in US dollar transactions a year and spend 2 days with them. Of course, with Agoda or someone, yeah, we do.
Okay, thank you so much for your time. Do we have any more questions? We can accommodate one more. No questions? Okay, you? Okay, can you hand the microphone, please?
Just one quick question. Do you recommend any books for e-commerce based on what you just discussed right now and how to drive revenue payments online?
We can't hear you. Can you just come in front?
Or microphone.
Come up front? Oh, really?
I'll repeat the question.
Okay. Just a quick question. Do you recommend any books for starting e-commerces?
As in reading material?
Yeah, reading material.
It's funny that payments is probably the least well understood part of the e-commerce ecosystem. And it's very, very hard to get information. There's an economics term, information asymmetry, about when one party knows more than the other. But you'll be surprised that our biggest customers in the world, what we can tell them about what's actually happening in payments is news to them. They've never seen it before. In terms of reading, there isn't really much out there. There's a lot of different conjecture and opinions. All I can say is that there are certain payments dedicated sites like payments.com and the papers with a Y. But if you're not in the industry, it'll just sound like nonsense because they'll be talking about with jargon and terminology you don't understand. So I think a big part of what I'd like to see happen in payments is people pulling down that curtain and providing much more of a transparent view. But you got to bear in mind that it's actually not in anyone's interest to do that. Visa, MasterCard, Visa were the most profitable company on the US stock exchanges 2 years ago. Why is that? Well, they're screwing everyone, right? Don't get me wrong, they're a great company and everyone needs them, but they don't really want their fee structure divulged. You don't really want to understand where the cost is coming from. So there's lots of reasons why trying to find information online, there are no books about this. You just really have to engage with the people who you think are the thought leaders. And again, in Indonesia, there's some really good little payment companies here who are doing really good things, but engaging with them and trying to have a set of questions you're asking and going through a discovery process is really the only way to go about it. So it's not a good answer for you, but I hate to say it, it's just a lot of legwork and talking, which is the way forward.
Thank you.
Okay, thanks. Thank you, Brad.
Thanks, everyone.
Thanks for your time.
Thank you.